Oh,
Hey Brian, how's it going?
hey, Shawn, what's happening?
Not too much, starting off the week pretty slow, but it's gonna be a pretty busy news week. So I think it's gonna be a pretty slow week overall. So I'm just gonna take it easy. How about you?
New York session was hot today.
It was moving pretty fast and then it died down all of a sudden.
Yep, yep. So
Yeah.
I took that trade at I think it was what at 10 o'clock ish.
Oh, the US
Um,
30.
yep. And I got out at I think I set the first TP for 750. And by the time I could move my stop loss up there, it went up a little bit more and then I think it came back and stopped me out in profit, which was fine.
Yeah, not bad. Profit's profit. I was looking at it earlier too. It looked like it literally like tapped our TP and then it came like crashing down and then it looks like it's moving its way back up. But it's better for you to be safe than sorry. Definitely.
Yep.
Especially during this week with the Fed speaking and Brexit. I think they have Brexit talk as well. So it's going to be pretty crazy, I think, Wednesday, Thursday for the most part.
You think US 30 too? Because that's my pair. I like to trade that pair.
Yeah, definitely. I think because here, let's see when the news is coming. So I think the news is actually, let's see if I can pull this up. Actually, I think I already I sent it in the chat yesterday. So yeah, there's news. It looks like, yeah, on Wednesday morning, there's news literally all morning. So we're probably not going to be trading New York session Wednesday. And then again, in the morning on Thursday, where they have GBP news, that's probably going to affect it as well. So it looks like Wednesday and Thursday, we might be taking it easy. Maybe some last minute trades on Friday, but I don't think that'll even happen. So I think today and tomorrow are probably be our best days.
Yep, that's fine. Rather be safe than get slammed by news.
Exactly, I agree. And those are going to be really risky trades. So it's kind of better for us not to, take the unnecessary risk.
Yep. All right. So what I'd like to go over is a couple of things I'm trying to understand with your expertise. I'm hoping you can help me. So like today, I've been going through the training in the your training, and I'm trying to find what's my best type of trading. And I like to scalp, but I'm not quite sure exactly. I went through the training. I understand the pivots being spread out, but it seems like I'm not getting in when I probably should. For example, if we look at right now, like right now, what's to you? What do you see going on with US 30?
So with US 30 right here, I probably anticipate it to probably come down a little bit because during Asia session, it generally reverses on that point. So like right here, we have the sell signal. I probably see it coming down. It might come down further or it might come down here. But if
Even though
it
we're in
doesn't
a
come down,
buy signal right now?
yeah, so I think technically this would have been completed once it reached, well, since this was a changeover in session. So this was at 11 a.m. During New York session. So this entire, let me see if I could. So from this point to, let's see, yeah, to this point right here, this would be the end of the US session. So everything past this is generally the Asia session. So usually once there's a push up like that during Asia session, it usually reverses. It goes the opposite direction. Generally, it happens like temporarily. It'll probably come down, maybe to this point. It's going to move very slow because Asia session is just generally a slow session anyways. So it's probably going to come down maybe up to, the end of the pivot or so on. And then once we get a buy signal, that'll probably set up the move for London session. So like if you're familiar with how we move during Asia session, it'll probably come down a little bit and then it'll go sideways. And then once we get closer to London Open, it
Like
usually
about 1 in
ends
the morning, right? 1,
yeah,
2.
it ends up breaking out like super high. Let's see if we could find an example over here. So Actually, yesterday was Sunday, so it's gonna be kind of hard to measure that. Let's see if we could find, let's go sometime last week. So we'll go from, let's see, vertical line. We'll go from the morning, which is 6:30. All right, here we go. Yeah, so 6:30 right here. And then you can see from this point up until this is where Asia happened. So this is when the market closed. So this whole area right here, let's see if I could. Yeah, this whole area right here, this whole zone right here, this is the New York session. So you can see from New York session, this was a sell entry right here, and this would have been our move for the sell. And then as soon as we entered Asia session, it went the opposite direction, right?
Yep.
So that's usually how it moves. Usually it'll move, the direction during New York session, and then during Asia session, it'll probably reverse a little bit, and then it'll just consolidate until it breaks out for the London session. So this would
You
be,
really can't scalp that Asian set.
yeah,
Asian set.
there's really no point. The Asia session is generally where you want to set up your move for London. So you can see right here, this pretty much just goes sideways. I mean, you can technically scalp it, but you have to go very heavy lot size, and it's going to be very risky because you never know when it's going to stop,
I know.
because you can see here, it kind of pushes up a little bit. And then for, let's see. So this is 1, 2, 3. So in about 3 or 4 hours, it goes up slightly, and then it literally just goes sideways from that point until London. And you don't want to get caught when it's going sideways like this, because if
It's
you were in a
painful.
buy,
It's freaking painful.
exactly, you're literally just watching, paint dry. You're literally just like, okay. And this movement is it's so minimal, where if your lot size isn't big enough, this is like 200 to 300 pips. Like, it's such a small movement, compared to the 1500 pip movement during New York session. You're literally going to be waiting, and then you're just going to be counting, time until it hits London. And once London hits, you're going to be praying that it's going in your direction, since you would have
I
ended
know.
buy here. But you can see here it ends up going opposite. So yeah, so this is Asia session, and then London session opens right here at midnight. So you can see this would be the entry for the London entry right here. So this was the US session to sell. The Asia session was the buy, and then right here again for London session, it would have been another sell. So if you were in a buy right there, you kind of would have, I don't know if you'd be screwed completely, but I mean, it's definitely a big risk for you to be holding that and then to go into this drawdown right here. But yeah, so this would be the London entry. And it looks like, we probably would have gotten out at TP1 over here, which would be, or TP2, depending on how many TPs you were using, which would probably be around 50%. So at this point, once it came down, you probably would have exited this trade, and then you would have taken the Asia entry, which, I mean, the US entry, which would continue on right here after 6:30.
What's the analogy behind it all? What's behind this all?
The
What
movement,
makes it, what makes it do what it does? I mean, what makes New York so explosive? What makes the Asia session so freaking boring? And then London can be all over the place.
yeah, it's just volume for the most part. So the US session, obviously, it's very fast because, we're trading the top 30 US stocks, the Dow 30. So obviously, it's always going to be moving the fastest between New York and London. So the thing with London is this is where the pre-market orders come in. So at this point, there's people that are putting in orders that are going to be flooded as soon as the market opens. So you can see right here, it always happens, like pretty much right here, as soon as the market opens, you can see a flood in orders, like from the time where, like a few hours before open. So this is about 5 a.m. The market technically opens around 5:30. But the New York Stock Exchange doesn't open until 6:30. So at this point, you have all these, pre-orders, pre-market orders that are coming in. They're pushing price up. But as soon as it comes up and the actual market opens, they push price, opposite direction. And then during Asia session, there's just literally no volume. And the people that are trading Asia session, they're generally trading non-US assets. Like they're trading things like the Nikkei, which is the Japanese index. So they're
Yeah.
trading that, and they're usually trading European assets as well, because that like crossover goes from Asia session into London. So for the most part, they're focusing on those assets. But the reason why there's such an influx of volatility from London into the US is because that's the London US crossover. So pretty much all the pre-market orders come in, and then they get pushed in the proper direction once the US market opens. Then for Asia session, it pretty much it tries to continue the movement, whoever's like straggling in the market. It's generally the people that are trying to catch the reversals. So pretty much, you can see here from the US session, it was coming down. And then there's always going to be counter trend traders that are trying to catch the reversal. So like as it comes down and the market gets near market close, at that point, a lot of people are pulling out of the market already. So everyone put their short orders here, but once it hits, close to closing time, everyone takes the orders out. So pretty much at that point, the price just stabilizes, and then you have all these counter trend traders that are trying to push market the other way. So they get a little push up to pretty much just scalp whatever they can get, and then during Asia session it just goes flat, and then it picks up and does the same thing again during London session. So you can see right here during London session, it pushes price slowly down, kind of similar to what happened here, where it gave its initial movement for the pre-market orders. So right here during London, it was going sideways. And then once we got closer to market open right here, just like we did over here, so 2 markets prior to market open, about 5 a.m., you can see a nice push in price. So similar right here, you see from 5 a.m., which is this point right here, you can see it push down from here to this point. And then same situation. As soon as the market reopens fully, it pushes in the opposite direction, and then it corrects back to where it's supposed to go for the rest of the day.
Would it
Because
be
this would
safe to trade like London 5 Eastern Standard Time into just before New York opens, and then wait for our signal that we got today, and then take that?
Yeah, you could. That's actually what a lot of day traders do, who that specifically trade stocks. That's why there's a lot of day traders who they only trade the first 5-10 minutes as soon as the market opens, and then they get out. So that could be your plan. You can do the pre-market entry where it's you're going in the direction of the trend prior to market. So say around 5 o'clock you see price going in one direction. So you can see right here, this is about 5 o'clock. You can see for 5 o'clock it's pushing down, right? And the market opens. You can literally scalp that down, and then when you can wait for the actual entry, and then you can take another entry once we have the actual daily entry right here.
So it's dangerous. It's dangerous taking a trade right at the open of New York.
Exactly. It's definitely a gamble, because the thing is, it's not always going to go in that direction.
Have you ever done it? Have you done it?
Me personally, I have before, but it was a toss up. It wasn't really, I didn't really find any accuracy in it. I mean, you could probably do it on the 1 minute. Let's go on the 1 minute, see if we could actually.
Because that thing goes every which way when it opens.
Exactly, because if you're going to trade on that short of a time frame, you definitely would have to go on the shorter time frame, since you're trying to get in and out within an hour, 2 hours possibly. So this is, let's see, I'm gonna go back to where we were earlier. All right, cool. So I have these marked up already. So basically right here, let's go to the 5 minute. I mean to the 5 o'clock.
So this is 5 in the morning?
Yeah, this is 5 in the morning. I don't think we'd be able to do it on the 1 minute. I think the 1 minute is just too, there's too much going on the 1 minute chart. There's way too much noise where it's kind of hard to catch.
Yeah, I've tried 1 minute. It's too fast. Yeah. It's too much.
It's way too fast.
5 minutes not bad.
Yeah, 5 minute actually looks good. So you can see, I'm just trying to find some sort of pattern, because right here's the 5 o'clock. So it looks like you get an opposite signal, and that would be in the proper direction. Let's see the 3 minute. And this is pretty much how I figure out my, the K2 strategies as well. Like I basically just go to a specific time I want to trade, and then I try to, do my trial and error and see what worked. And that's pretty much how I figured out the daily entry too with the 10-minute. Well, let's see. So this is the 5 o'clock. It looks like it worked fine over here with the 3-minute actually. So here's the 5 o'clock mark. And then you can see the first signal was right here. So you could have taken this over here for a little scalp move towards the upside. And then you could have gotten out right there. And then as soon as the market opened, you could have taken, the other daily entry in the opposite direction. Let's see how this plays out over here too. So let's see. We'll go from this London session, mark the 5 o'clock. It actually looks like it works pretty well. So this might be the good time frame to use for this. I think the only struggle with this would probably be trying to figure out what's a good range for you to enter from, because on the daily we're trading on the 10 minutes, so 1500 pips is pretty easy to catch. But since you're trading on such a shorter time frame, you might have to cut that in half. So instead of 150, you might just be like
75.
75.
Mm-hmm.
Let's see. Because the thing is, you don't want to take on too much risk if you're trading on a shorter time frame, because you're not really anticipating. Actually, this looks perfectly fine. Yeah. So if it's 75, it would have hit TP right here, and then you could have taken the next entry on the 10-minute, which was.
Do you think it would be too risky to raise the lot size up doing this, even with a smaller account?
I mean, it really depends, because we've only done this for a few days. I think we'd have to back test it like a bit further to see if it actually is consistent, because maybe 5 o'clock isn't the sweet spot. Maybe we need to push that to a different time, because that's kind of how it worked with the daily strategy too. Initially, I was trading it from 5:30, and then I did a whole bunch of back testing a couple years back, and then I realized that that it worked better on the actual New York Stock Exchange open, because I was technically, this is how I was trying to trade it initially. I was trying to catch it before the market opened, and then I wanted to catch that momentum swing as soon as the market opened. But then I realized that it's a little risky, because you never really know what's going to happen when the market opens fresh for the next day.
So
But
what's behind the indicator, Shawn, on the, like today on the New York session? What actually is the indicator using as a guide? So, for example, New York opened this morning and went berserk, but went completely opposite of the trade. So, for example, I think it opened and went down, and then ricocheted back up on another candle. Then finally we got the signal and it went up accordingly. What is it actually looking at? A reversal?
No, so the indicator, what it does is it detects the momentum in the market. So, depending on the volume of the size of the, the orders going in during that specific candle, if it's high enough, that's how it'll detect the movement. Like you can see here, they're like small candles, and all of a sudden we have a big candle right here, a big strong bearish candle, and then that detects the momentum swing downwards, and we pretty much just ride that wave down. It's kind of similar to the opposite direction. Like right here, you can see we have some small candles, then a bearish candle, and then you see the momentum building up again, because the momentum was built up here, pulled back, momentum pulled back right here, and then we got a very strong bullish candle right here, and that's when you got the signal. So it's basically what it detects. It just detects momentum in the market, in comparison to the previous candles. So you can see right here, like with this buy signal, you can see that the momentum was already building prior to it. Similar to, this red candle right here, you can see that it comes up, it establishes a high, and you get some weak bearish candles followed by a strong bearish candle right here. But obviously, price was trending upwards, so that would be considered a retracement instead of an actual momentum swing in the other direction.
Then we got a
Um,
nice strong bullish candle.
exactly. So like right here, you can see that, let me just take everything off. You could kind of see, right? So this would be the signal candle right here. You can see that price was coming down, and then the bearish momentum was kind of slowing down right here, because you can see it was pushing up, then it pushed down, then it pushed up, and it slowly pushed down, and then it hit like some sort of support area right here. And then if you take this off, you can see that there's actually a huge wick right here.
Mhm.
So this right here is indicating that there's an imbalance in power. So, obviously, if you're watching this from this area back here without the signal, this looks like price is pushing down. It looks like the bears are in control because we have more red candles and price is just consistently pushing down. But as you can see right here, it kind of slows down because it doesn't create a lower low. So it creates a low right here, pushes up, and then generally what people are anticipating is price to push lower. So if it was to push lower down here, then it would confirm the bearish control. But since price stopped right here, it kind of established some sort of support right here.
Mm.
So, you see this nice rejection right here with this, full wick. It looks like a reversal candle because it kind of looks like a doji, but a wider doji. It's not like one of these smaller ones, like a spinning top or something like that. But
Mhm.
once you get that, you see this big bullish move. This is pretty much what indicates the swing in momentum in the opposite direction, because obviously it's trending down, but then it established like a double bottom right here, or a triple bottom, I guess, a 1, 2, 3 test right here, and then a strong bullish candle. So if you turn on the indicator, that's pretty much what it indicates. Like it detects it, but it's kind of hard to see with your naked eye unless you're very good at following patterns.
Yeah.
And pretty much all of this right here, this is what I see without the indicator. But I put it into an algorithm where it can basically detect what I'm looking for in the market.
Mm.
So
Nice.
it's kind of hard for me to, I mean, I'm trying to explain it to you, but it's kind of hard for me to get what's in my head and then lay it out without you actually understanding what I'm saying.
Yep. So the indicator sees this as momentum up, turns
Hmm.
turns green. How do we know when it's going to stop? Right? How do we like at some point you're going to get another candle or two or three candles, and then it's going to seem like it fizzles out or pulls back, right?
Yeah. So that's where you use the other indicators as well. So you'll probably use, the pivots to identify the trend. You can see that it pushes up right here. So, as price comes through, and you can see it start breaking through these, like right here, you can see where it breaks right through. It's kind of hard for me to explain, but just me looking at it, if I don't even have these indicators on here, like if I was to just use the momentum indicator, I mean the pivots indicator, you
Now,
can
to
see that
you, do
there's a
you still see that as an uptrend, or would you be
no.
getting out of the trade at some point here?
Well, that's why we have the parameters. So we only try to reach for 1,500 pips because I've done my back testing, or I've
Mhm.
identified that 1,500 pips is generally going to be the consensus for a full move during the New York session,
Okay,
New
good.
York and London session, and that's why we always just leave 1,500. Before I used to put at the previous swing, which would be, so let's see. So if we were to enter this trade right here, the swing would probably be somewhere down here, but it still would be 1,500. So it falls within the same analysis that I would have done um, on a normal trade. But sometimes if the market's really volatile, sometimes the swing would be at maybe 2,000 pips or 3,000 pips, and we used to do that prior.
What's
And
the
in that
biggest move you ever
situation,
seen? What's the biggest move you ever caught?
um, during a New York session, it was
Or any session?
probably
3,000?
it was probably more. It's closer to like 5,000. I think during
Oh,
March, the market was just moving like crazy. That was when the market was just dumping. Like, the stock market was just crashing like hard. And literally you can just sell at any point, or you could sell at any retracement. You can make a ton of money just catching it right back down.
wow.
I think that's probably one of the biggest moves that we've caught on like an actual signal that I sent. But there were other moves where I caught bigger moves where I was just I'd basically catch the trade and then I would just trail my stop loss. So instead of having you know, a TP, I would just literally just keep trailing it, trailing it, trailing it. But that rarely occurs. That like there has to be something going on in the market that causes that to happen.
Mm.
And that was during March when the market was crashing. But then you would still get screwed because um, the Fed or the stock market, they start to activate these things called circuit breakers. So if the market's going down too heavily and it drops too many points, what they do is they freeze the market. So when that happens, you kind of get caught in the middle because it's you're getting caught in between the Fed pumping money into the market to, you know, stimulate price and to push it back up
Mm.
versus the people that are trying to, you know, basically drop the asset as far as possible.
Yeah,
I'm
I
not sure if
see.
were you trading during March when that was going on?
I was just starting not on your indicators, just myself. But yeah, I got hammered one day on it reversed. Um, it was in March. Yeah,
Yeah, yeah. During March, it was crazy. Like price was pushing like 10,000 pips per day, or even more. It
I
was
know.
pushing so hard that they would have to, like I mentioned, activate the circuit breakers that would stop the price from moving. So although it was dangerous, it was really easy because literally you can. So we were using the indicators, and basically what we did was whenever
I
we
wish I
got
had these
in,
then.
yeah, whenever we got an opposite signal. So whenever we had something like this where we got a sell signal like something like this, I would put like a buy stop order at that high using the momentum pullback strategy. And then as soon as price came back up, it would trigger it and we would just ride that thing all the way to, you know, whatever direction it was going in.
Wow.
Yeah. But that's
So
like once in a blue moon. Like that happens very rarely. And you just have to be able to catch it. I mean, you never know when it's going to happen, you know, unless there's something that indicates that something crazy is going to happen, like, you know, COVID or some sort of other type of warfare that's going on in the world.
exactly. Um, so like today, these candles that went up, then all of a sudden it pulls back. What causes that? Is there a bunch of sell orders up there, or is this manipulation?
This is pretty much people who rode this, you know, this wave up, and then they sold off to take their profits. This usually happens like during, like if you're trading during New York session, usually once you get closer to closing time, that's when people start to just sell off their trades, and then it ends up pushing in one direction or the other.
Okay.
Yeah, it's just a sell-off because like I mentioned earlier, you know, usually there's a huge momentum swing once the market opens, but once you get closer to the end, you know, all the day traders are trying to get out. So at this point, they just end up selling everything off, and then price just ends up going down. And then this is where the manipulation happens because you'll have the day traders that are selling off their orders, but then you'll have other people that are trying to stabilize the market. So this is why we try to get out, you know, specifically at 1,500 pips because we don't want to get caught in any of this back and forth movement over here because this is a pretty big movement, I think, from the spike. Yeah,
Yeah.
so it spiked nearly 2,000 pips. So that's the thing that kind of screws it up because, like I mentioned, like there's a huge momentum swing up, and then all the day traders try to get out before, you know, 2 hours or 3 hours into the trade. So this is about 6:30. Looks like everyone started getting out around. Looks like this is the beginning of the sell-off. So the market opened at 6:30, and then an hour later, this is where all the day traders were pulling out of their trades. And then at this point, when people were pulling out, they had other people that are on the opposite trying to, you know, get back in for a discount. So like a lot of people were buying once it pulled back because they were
Hmm.
anticipating price to go back up. But then that's when you have the second wave of people that decided to sell off. So at this point, you know, people sold off, people tried to get it at a discount, it pushed up a little bit, then people started selling off massively.
Do
And
you
it
get
came down
back in at all, or after you get your initial 1,500? Is that
to,
you call it a day?
yeah, I call it a day. This is like unnecessary risk. You know, if you try to, this is what I call greed. Like honestly, once you get out at this point, like since it's such a high win percentage, instead of me going in and trying to take, you know, multiple trades, instead of that, I'd rather just go heavy on a lot size on the daily,
Yeah.
because I understand what, the win rate is for that. Whenever we take this trade, there's always going to be an edge on our side, because we back tested this data so far back where we realize that this actually works long term. Once you cross a threshold, like, so I think 1030 is probably the threshold. After 1030, I wouldn't take any more trades, because that's when the
Yeah.
market starts to go a little funky. So like generally, if the daily entry doesn't appear by 1030, I just don't call it entry, because that just goes too far out. And then that's where you start to get mixed up with the buyers and sellers. The people that are selling off before market close, and then you get mixed up with people that are trying to buy at a discount. Because obviously everyone thinks that, the stock market just keeps going up, but that's not always the case. like we saw back in March.
Yeah.
So it's kind of, it's a double-edged sword. So for the most part, like when I get in and out of my daily entry, that's about it for me. And then I just
Okay.
wait for the next day, or I wait for London session, and then I take it at that point. Because when I enter a trade, I like to fully know my risk. I like to know what I'm risking for that day. And especially since we're trading with FTMO, we already know what our max risk is for the day. So, once we make our profit, that's pretty much it for the day. Because if you overtrade, then you might, go overboard and then hit your daily loss, and you're like, crap, I should have just let it be.
I've done that so many times. Greed.
Yeah, exactly. It's greed.
Or frustration, trying to get back in and get your money back that you lost. And then it goes even worse.
Exactly. It just goes berserk, and then you don't even know where it's going, and you try to scalp it one way, and you get stopped out, and you try to scalp it the other way, and you get stopped out. And that's pretty much what happened here. It looks like people sold off right here, and then it looks like people try to get in for a discount right here, but then it looks like they as soon as they reached this point, price came down, stopped them out. They probably tried to do the same thing again right here, buy at a discount, then they end up getting stopped out again right here, and then same situation. It's all pretty much trade psychology, because I could already see that this specific area right here is an area where a lot of people got tricked. So I think right here, a lot of people probably FOMO'd into this trade. So that this was going sideways, and this has happened to me a lot of times too. It happens to me where I see price shooting up, and then you're just thinking to yourself, well, should I enter this trade? Should I enter this trade? Once it gets to this point, you finally enter the trade, but
And
you're
it's
so
too late.
late that it's way too late. Yeah. And then you end up getting caught in this mess over here.
Is it okay to do that, to chase the trade? Because I mean, I've gotten a lot of trouble chasing trades,
Yeah, I would
especially in the
never.
middle of the candle, and the freaking thing reverses on you, and then you're really in mess.
Exactly. Yeah. I would never chase a trade. And that's why I only trade when I get a signal, because, without the indicators, you kind of don't have a good idea as to where to enter, because there's so many different points where you can enter from. But if you had, obviously you have the indicator, and if those that do have the indicator, you kind of have an edge in the market, because you're able to see, how the momentum is swinging, versus just, guessing. Because obviously if you're looking at this chart, let's see. So yeah, if you're looking at the chart right here, like real time, obviously there's no way that we could have anticipated that bullish move was going to happen right there. And then as soon as it happened, this is where your emotions run high, because you're like, oh crap, should I enter this trade or should I just wait?
Right.
And then
So
you end up waiting.
yeah, if you didn't have an indicator on there,
Yeah,
you
there'd
could
be
chase.
no way for you to determine that this would be an entry. Because right here, this is just even without the pivots, if you're just looking at it from a naked chart, this is pretty much what it would look like. And it would look like normal movement. But if you have the indicator, you already have that confirmation right there that, okay, this is a real momentum swing up. Because sometimes you'll get big pushes like that. Like, let's see. Yeah, you'll get like a big push somewhere, but they're not, there's no indicator there that's telling you to enter the trade. Because I'm sure, like, if you saw this right here, myself as well, I probably would have wanted to enter this right here.
Mm-hmm.
You see it going sideways, and it's, technically it's in a bullish trend up. So if you were to see this without the indicators, and you're just lining this up like that, and you see that nice bullish candle, I'm sure a lot of people would have wanted to enter this trade, because it looks like a nice bullish candle. It looks like, it was coming down right here. There's a nice rejection. Then it was followed with a strong bullish candle, I'm sure a lot of people would have entered a buy here, because this is just basic price action. You see a bearish move down, you see a nice rejection followed by a bullish move. So obviously it looks like a correction upwards, but if you were to take that trade, I mean, you would have ended up getting burnt.
Yeah.
Yeah.
Where
And
is
then if,
where does the market makers really play into all this? Were they,
uh,
was that part of it today with momentum? Are they the ones that are really behind pushing pushing it one way or the other?
so it really depends. Usually I'm usually following CNBC in the morning, but I wasn't following it today, so I'm not sure if there was stuff going on in the news. I'm not sure if you're familiar with anything that was going on, but it could be a mix of different things. So it could be a mix of news happening. On top of that, it could be a mix of the market makers, institutions just, waiting for people to like act on a specific news event. Because the thing with the market makers is that they know what everyone's doing. And that's kind of why, I stray away from common strategies like price action. Because if you're trading how everyone else is trading, the market makers are watching every move you're doing. So literally, if
They can
you're,
actually see it, huh?
yeah, exactly. Like they know where all the orders are. And if you're just trading basic, like price, like basic, rejections off price points. So let me see if, let me just rewind this to
Like institutional candles, right?
exactly. So let's see. So we have this over here. I'm just gonna try to see if I could find some way that they probably would have tricked people. Yeah, like right here. So we're right here, we have a zone right here. So obviously, if you see this on the chart, because this is a clear example of a break and retest, which is, a strategy that a lot of people use. So right here, you can see that price comes down, it breaks above the zone right here, and then it comes
Yeah.
down to retest, right? So generally, if you're trading just basic price action, this would indicate, that odds are price is probably going to go upwards, right? So right here, someone probably would have entered a buy entry right here. And then this is kind of how they trick you, because the thing is, the market makers and the institutions know that, well, the TP would probably be farther than this. This is only about 600 pips. So generally, I think it'd probably be a little higher than that. Because normally how price action traders trade, they try to trade like a 3-to-1 risk reward. So they're doing like 1,500 with like a 50 stop loss. So this is what a normal, price action trader would mark up their trade as. So right here, you can see the rejection. So someone would consider this like a break and retest. And then as it comes up and it goes sideways, they get stopped out right here. And
Yep.
then when people get stopped out, this is a very common thing for a lot of people. Once they get stopped out right here, they think, oh, okay, the market makers were just tricking me this one time. This has got to be the real move right here, because there's another rejection with a strong bullish candle. So what happens here? Another person enters another buy, because they're like, okay, they got me that one time, but this is going to be the real move right here. And then they end up getting screwed again a second time. And this is just, I mean, this is like clockwork. This is how a lot of people trade. And this is why I never, I don't like falling into that trap. That's why I trade differently. I trade strictly off momentum, because the way I trade is I try to catch when the banks and institutions are making moves. So like we have the momentum candles. So basically when I see, a momentum candle, I just try to ride that wave with them. I try to figure out where they're trading. And then, I've already found a sweet spot here when the market opens. And as soon as I see that momentum candle, I pretty much just piggyback their ride, because
Yeah.
I'm not trying to predict where market's going. I just want to hop along for the ride and make my profit. And then once my edge is over, I just exit the trade, instead of me predicting, where price is going to go. Because if you're predicting the same thing that everyone else is predicting, like this break and retest this is a clean break and retest. Honestly, if I saw this and I didn't have my indicators, I probably would have taken it, because just looking at this here, this looks like a perfect setup, because you see the break and retest right here. So price broke the zone, and a lot of people consider this like a supply and demand zone, because you can see that, generally price rejects off a specific point. Even if you go farther back in data, you can see that it's a pretty strong point, or price generally rejects from. So like right here, if I was to see this, this looks like a very perfect break and retest. So price broke, retested, it shot up, and then we got a full bullish candle right here. So this is a strong bullish candle. You know, normal person would have noticed this as, you know, a strong bullish move to follow, but the market makers know that this is what a lot of people are looking for. So what they do is they push price down to stop them out, and then they set up another break and retest right here. So like, all right, cool. This is the second break and retest.
They must
And
sit
this
back and laugh their ass off. I'm telling you.
this is why I sit back and laugh when I see people talk about, you know, just trading these basic patterns. It's just funny because a lot of people don't realize that the market's being manipulated. Like a lot of people think that they can predict the way that the market's going to move, but in reality, it's literally impossible unless you're like an insider and you have some insider information. But you know, you can see this right here. This is a perfect, even right here. So if I go back, so you see this right here. This is a strong break and retest, strong bullish candle. You know, whoever took this trade would have gone stopped out. Again, right here, it pulls down, and then people are like, oh crap, this is for sure going to shoot up because it's another break and retest right here. Plus it's a double bottom, right? So those are two price action confirmations right there. So like, okay, cool. I'm going to double up on this trade. So they go like, they go with the normal lot size here, but they double up on here because they're like, oh crap, I need to make up my money from this trade. So I'm going to double up my position over here. Because their confirmations are so strong. You know, it's a double bottom, it's another break and retest, and then they enter this trade again right here. And then this would probably be wide again because generally, you know, price action traders like to trade a 1 to what is it, a
3 to
1
1
to 3 score, yeah, 3 to 1 or something like that, and then they end up getting stopped out again.
Yeah.
And then right here, and then this is another trap right here too. I mean, there's so many price action traps right here. This is like a perfect example. So they got stopped out right here, right? They got stopped out here again. And here's another, this looks like another perfect break and retest because you could see just by looking at it, it looks like a momentum swing back upward. So it's like break and retest, stops them out. Break and retest, stops them out again. And then again right here, they're like, okay, this has got to be it this time. Like, you know, and I've fallen into this trap before. This is why I don't fall for this anymore because, you know, I've been through this one too many times, and I know not to trade this way anymore. So there goes another entry again right there, and then they stop them out again.
Yeah.
You know, it's a never-ending cycle, and at this point, someone's probably blown their account.
Yeah.
You know, and instead of, and this is why, like, I never recommend anyone trade how everyone else trades because there's just, you know, your odds of winning are not going to be very high. Like you'll probably win every so often, but you're not going to be consistently profitable. That's like the thing that a lot of people don't understand. Like a lot of people will get a few wins, like right here, this might have been a good win right here. So this was a rejection off this point. This is how the market plays. So generally you get a rejection off this point. Someone does that same strategy right here. So, you know, they're kind of under the illusion that the strategy is working because they give them a little gimme here. So this is what I call a gimme. So right here, they're like, all right, cool. I hit this like so perfectly. And then once it reaches this point, they end up losing 1, 2, 3, 4, 5 times. They lose all the profit from this one win. And they're like, oh crap, well, the market's been like manipulated or something like that. You know, there's always a reason behind it. And that's why I don't like to trade this way because it's very tricky.
Yeah, I'm
but
with you.
but price action is good. Price action is good if you pair it with something else. I don't recommend just trading that's, you know, by itself, like a break and retest. This is a great strategy if you pair it with, like me personally, I pair it with a K2 indicator because if you were able to catch that, like say if we were right here and then we got that buy signal, maybe I would have taken it if we got a buy signal up here. This right here.
All right, so that's a good question. So how do you know? Okay, so right there we got a bearish candle. How would you know without seeing the rest of this that you shouldn't take this?
This trade right here.
Yeah, right. Because right at the actually
it'd be this one, right?
One back, the bearish red candle there.
Oh, then, to not take this trade?
Yeah.
Oh, because it's at the K2 SR zone. Like remember, our initial thing is to not trade where the zones are, because generally what happens is it rejects off the zones.
Okay.
So if it's
Okay.
too close to the zone, we wouldn't have taken this trade. And then this one right here might have been a tricky one. So this right here looks like it might have been a decent entry for a scalp. So let's see. Yeah, so it looks like it'd be a good scalp entry, but let's see if there's any zones that are nearby. So there's no upper zone right here. When there's no upper zone, well, what I generally do is I go on the higher time frame, like the 15-minute, and then I just try to identify a zone, because there's always got to be a higher zone. And then there you go. So you go on the 30-minute right here, you see that there's a zone right there. So I go back to the 10-minute, and this is why I wouldn't have taken this trade.
You wouldn't have.
Yeah, I wouldn't have, because the zone's too close. So obviously you don't want to take this trade, because what happens when it reaches the zone is it's probably going to reject off it. And look what happens here. Perfectly.
One of the indicators just shows the high and low. Which one is that?
That would be the
Just the K2?
pivot cycle indicator. Are you
Yeah.
talking about these these numbers right here?
Yeah, the dotted lines. Yep. And that keeps moving. Right.
These the pivots high low.
This there's an indicator, the K2 indicator.
Oh, yeah, the original K2SR indicator.
Yeah. Should I have that on my chart or no?
Not necessarily. I think it's better off to have the version 2 on, because the version 2 gives you that same point, but it also gives you the other points as well. So it doesn't just give you the closest support resistance. So let me show you here. Just delete everything. So right here you can see that the support resistance is right here. This is the closest support resistance. This is good because it gives you where the resistance and support is, where price currently is. But on top of that, it'd probably be better off if you just had the SR version 2, because
Okay.
it includes the support resistance where price currently is. So looking at price right here, you can see that the resistance is right here and the support's down here, right?
Yeah.
But if you turn on the version 2, it gives you that same support resistance, but it also gives you the other zones as well. Because you kind of
Okay.
want to have a good understanding as to where the zones are. And generally, the way that this indicator was built, it kind of detects where the bank algorithms are. Because in order for this specific zone to come up, this same exact price point, so you can see right here, this is 2789.
Yeah.
In order for this zone to get created, this specific, like this very exact price point would have had to been tested at some point in the past. So that's how it kind of identifies where the bank algorithms are trading, because bank algorithms, they have their specific price points where they will always reject from. So if price reaches that point, the bank fires off an order and they push price away from it. So if you have the K2SR indicator, you know exactly where that happens. You can see right here, this is pretty much for the banks trade. So you can see it comes up, the banks are like, nope, we got to push price back down. Comes up again, the banks push it back down again, and then it creates a new zone.
How come it
Because
does that? The banks are actually doing that?
yeah, so this is how they make their money. They push it down really quickly, but they have a huge lot size. So they just push it down real quick, and then they get in and out with profit right away.
So do they have to come, is there any analogy for them to come back to places where they force the price up? They bought to sell or sell to buy? Is that the truth to that?
Well, there's just, their algorithms are always running. So they have so much data from so far back, and they know where other people are trading. So they know that, these are specific areas where people are probably looking at, or where it's been tested in the past. Because basically what they try to do is they try to merge, they try to basically counter trade what everyone else is trading. So
Right.
you can see right here, generally, people will be trying to trade in one direction, and then they push it in one direction and they push it right back. There's I wouldn't say there's any specific reasoning behind it, but they're always trying to one up the retail traders. And that's why retail traders are, there's only so many retail traders that last long term in trading. Like you'll see a lot of people trade for, a few weeks, few months, and they'll go disappear, and then they'll come back once they have money again.
Yeah.
It's a never ending cycle. If you were to continue trading the same way that everyone trades, I'm sure you're aware that there's not very many long-term traders that are able to trade like every single day, because
Helps you run out of money if you keep trading like
yeah,
that.
exactly, your luck runs out at some point. And that's like I mentioned earlier, the banks give a bunch of gimmies. So they'll see this resistance here, and they'll give them a little win, and then they'll give them another little win until they go and they pretty much wipe out their account following that.
Yeah, exactly.
I mean, yeah, it's all really trade psychology. So like the real game in it is to not really trade the same way other people are trading. But the
Got it.
problem is a lot of people they fall into that trap, because everyone's learning from the same people that trade the same way that everyone else does.
Well, I can tell you, I like these indicators. I mean, this
Yeah,
is the way to trade. I just gotta get used to it. It's all different to me.
oh yeah, no, definitely. And that's what I tell a lot of people too, because a lot of people are stuck trading, the way that they originally learned. And there's no problem with that, because there's no wrong way to trade. You just have to make adjustments. A lot of people, I think I was talking to someone yesterday that he was really into break and retest. So I was telling him that, if you really like break and retest, continue to trade break and retest, but incorporate the K2 indicators on top of that, so that you know when not to take a trade. Because it does work. Like you can see here, price broke, retested, and then it shot back up. The strategy does work. It's just that you kind of have to identify where not to trade. Like right here, obviously if you're going to take this break and retest, you probably would have wanted to get out before you reach this top right here. Same situation, with down here. So this is like a break and retest down here, but you obviously wouldn't want to take that trade because it's so close to a zone.
This is
So
live right now, right? So it's what did it do? It just pulled back.
Oh, for this entry right here.
That's live? Is that where we're at right now?
I know. So this right here is where we I just rewinded to the specific point. I was going to use this example as a break and retest. So like pretty much right here, price came down, it broke, retested, and then some people would have taken a sell here, but since you have the K2SR indicator, you know that there's a zone right here. So in this point, you probably wouldn't take a sell because obviously price is probably going to.
So in this case, point, you would take you wouldn't take a buy until it crossed that zone right there. Right now, right there. When that candle closed above that zone.
Yeah. So, well, that specific strategy, the K2 zone strategy, that one's kind of hard to use on the 10-minute because there's a lot of noise on the 10-minute. I mean, it could be used like you just spotted that right there. So, by spotting that entry right there, it actually worked. So pretty much right here, price came down and then it broke right here and we got a buy signal. Technically, you could have taken this trade, but me personally, I probably wouldn't have taken it because it's so close to this next zone over here. It's only about 150 pips, which, this probably wouldn't even cover your spread in some cases, because the spread is like 200, 300 pips. So you literally would have to worry about.
I mean, it's another place that it's hard to make money when it's, like when the spread is 200-300 and I mean, you're trying to get 600.
Exactly. It's literally impossible in those cases. That's why you need a really good broker, or you need to be really quick. And that's why scalping is kind of hard. Like a lot of people like to scalp, but you need a really good broker to scalp. Preferably if an institutional broker where you get little to no spread. Commissions might be high, but commissions don't really matter once you're making a profit because you can just cover that easily.
Yeah. So for me, what do you feel like trading intraday at the 30-minute?
That used to be my favorite time frame actually. The only reason I stopped doing that is because it's kind of hard to share my trades because it moves so fast. But it does work pretty well. Like if you're trading on your own, I think 30 minutes pretty cool. It works all right if
I
you
back tested the
have the
US
time.
30 on your indicators. It looks to be pretty accurate at if you're taking trades on a 30-minute chart.
Oh yeah, definitely. Let me see the pivots.
And it's less stressful.
Yeah, exactly. Because the 30-minute that's like, you know, that's the golden intraday time frame, I'd say. I used to trade strictly off the 30-minute, which, you know, it does work pretty well because it does give you enough cushion for you to make some movement without, you know, getting stopped out too early or with the spread and whatnot. But I mean, it would depend on what you're trading as well. You'd have to also, because if you are you trading US 30 on 30-minute? Because the
Yeah.
movement on 30 is a little bit faster. So like if you were to take something like this right here, I mean, I guess it's not too bad. This would probably be a 1200 pip stop loss, but you would hit TP right here eventually. But it does look pretty good overall.
Yeah, I was looking at it. And I mean, I haven't done a lot with it, but I think it looks pretty snazzy that you take like that one right there. I mean, you take
Yeah,
that
like this.
30-minute candle. It's a stop loss before it went up the other way. It's probably about 600, 700. That 11:30 candle.
Oh, the 1130 candles. Oh, this one right here. Or are you talking about
All the way
this one
back,
over here?
all the way back to that 11. Keep going. The next one, 11, there, right there. I mean, if you took
Oh,
that,
yeah, if you took this right here, this would be great. The only problem with trading US 30 on the 30-minute is just the fact that it crosses into other sessions. Like I was mentioning before, you know, when it goes from session to session, what tends to happen is price usually reverses. It could be temporary or it could be a full reversal. So like right here, this was like Asia session, or no, this would be New York session. So you would have entered this at 12 noon my time, and then in about 2 hours, market closed. So you can see here, there's a huge gap in the market
yeah, that's
where
not
like,
good.
yeah, and that's why I personally don't recommend trading US 30 on the 30-minute because
Okay.
I never really recommend holding it into another session
No, I'm
because
with you.
yeah, the thing with indices is that it moves so fast where you can be very deep in profit and then the next 5 minutes later you can be completely negative.
And you got no
Um,
control over that.
Literally you have no control. Like this one, if you hold this into market close, like this would be a massive drawdown right here because this is like 1300 pips plus the swap spread, which is like another, you know, maybe 1000 pips or so.
Oh, wow.
So the thing is, if your stop loss was, you know, about 2000 pips, like somewhere around here, you would have gone stopped out if you didn't remove your stop loss, or if you didn't have enough money in your account, you'd have
Yep.
gone margin out at that point.
Okay, that's not good. So 10
And then
minutes,
that's why,
10 minutes.
yeah, definitely. So I recommend on indices, I personally would only trade on the 10-minute, and I generally wouldn't want to hold into the next session.
Okay.
Or you know, what you can do is you can get out of that trade, and then you can just re-enter if you get another
Have you
entry.
ever swing traded US 30?
Oh hell no, that's like 6,000. That's a big risk because if you swing trade US 30, like you never really know when the market's gonna crash. Like, let me see if I can go back.
You
Like,
know people that do?
what was that?
Yeah. Do you know people that have swing traded US 30?
Yeah,
I mean, you must
yeah,
have that huge account.
yeah. Wade actually he swing trades a US 30, so like his stop loss will be pretty wide. Like you need to have a pretty decent sized account to survive that because so just looking here, you know, normally people think that, you know, stocks only go up. So literally if you were to hold this up right here, if you made a late entry or something, um, like if you entered somewhere around here, say you entered late, you wanted to you let me just rewind to here. Because if you look at price right here, it doesn't show any sign of stopping, you know, it just looks like a straight push up.
Yeah.
But it ends up dropping right here. And if you're holding this, let's see, drawdown from this point, if you enter right here, you'd be in massive drawdown. This is like 3,000, maybe 4,000 pips.
Wow.
And you're literally praying because you don't know if this is going to drop down to 5,000 pips or 6,000 pips. It's kind of like you're literally just testing your patience, because it's either you cut your losses here or you like pray for it to come back up, which it ends up coming back up. But
Yeah,
then this happens right here. So say if you say you get stopped out right here, you're already out 4,000, 5,000 pips. You're like, all right, crap, I'm gonna wait for the next one. So if you don't have the indicators, because obviously if you had the indicators, you'd have the edge right here, because you would have entered right here. You wouldn't have waited until this point to enter. Same with right here. You would have entered right here. You wouldn't have waited way up here. But if you were to enter at some point like right here, because it just looks so good, you know, if you're looking at US 30 from a bird's eye view, it looks like it's never going to come down.
yeah,
But if you're to enter somewhere above here, say you try to enter this trade up here, and then you just let it run, this is a massive drawdown from like this point to down here. This is like a 5,000 pip risk. So if you
yeah,
lost 4,000 pips here and you lost 5,000 pips here, that's like basically a blown account at some point.
yeah. Wow.
Yeah. Yeah. And since our win rate's so high on the scalp, or you know, on the daily entry on the 10-minute, you know, those profits add up over time. So it's kind of better to just add up those profits, and then, you know, as your account grows, you can just increase your
So,
lot size,
yeah, that's what
because
I plan on doing.
yeah, because you already know what the win rate is, and it's just less stress because you take one trade a day, and then you just call it a day pretty much. And then the next day you're like, all right, I'm already up this like X amount of money. I can, you know, increase my lot size by one lot, or so and so. And then you just keep adding and adding and adding until, you know, until your account grows to as big as you want it to be.
Yeah. Well, that's my problem. I mean, I've been running with a smaller account. So, I mean, taking the entries, the daily entry that you post, you know, even though the accuracy is there, I'm still cautious about a smaller lot size, because it could reverse and stop me out. And I don't want to get stopped out at a one, you know, at one lot size on a small account. So I trade it smaller, but when I scalp, I'm willing to scalp at one lot size, right? Because I'm watching it, and I can shut it down if it goes the wrong way. You know what I mean? So I've had some luck
Exactly.
doing that.
Yeah, the main thing with scalping, I think, is to always have a stop loss. I see a lot of people they try to scalp without a stop loss, and I mean, it's happened to me too, where like generally I would have my stop loss at the lowest pivot, and then I try to just hang on a little bit because I'm like, all right, it's reached like the last pivot. I'm just gonna let it push a little farther, and then it ends up spiking and it stops me out like way down here.
Yeah.
I'm sure you've run into that a ton of times
Oh,
as
it
well.
pisses me off.
Yeah. So like for the most part, I think, yeah, if you're gonna scalp like that, as long as you have a stop loss, you know, you should be fine. You know, just eat the
But you know,
loss of it.
sometimes, I mean, sometimes it's going the other way on you though, um, where you know, I have a stop loss in, and it just barely ticks my stop loss, trips and takes me out, and then goes in the direction that I wanted it to. So,
Exactly.
and I've done the other thing where I run without a stop loss, and you're right, you're riding it, it's going to turn around, and son of a bitch goes, you know, 2 more hundred pips in seconds.
Exactly. That
You
that
know,
happens. I mean, it's all about that. That's like straight trade psychology. I think, well, because for me, that was always in the back of my mind. So whenever that happened, I was like, all right, well, crap, I should, you know, they're gonna stop me out, so I might as well just take off the stop loss and try to like run with it. But then it ends up reversing super hard, and I'm like, crap, I should just put a stop loss.
yeah,
But that that whole situation is it's based on manipulation too, because like I mentioned earlier, the institutions and the banks, they know where your stop losses are. So, you know, what they're going to do is they're going to spike price to where these zones are. They just pretty much spike price to it because they know people put their stop losses at these specific points. Like how I mentioned
is
to
that
put
what
your
that
stop loss.
big wick is right there? Is that a stop? Is that a stop hunt? That
Yeah,
20 right there,
it looks
that
like it.
long
Yeah.
wick.
Yeah, because it looks like this zone was created. So let's go back to that point. Let's see if there was a zone created there already. So let's see. Let's go from right here. Yeah, so it looks like the zone was actually already there. So the thing is, we have this edge where we know where the zones are, but the thing is, the banks have this edge too, because we're basically just copying their edge. So we know what they're looking at, and they know what we're looking at. So basically, when I have a stop loss, I usually like to put the stop loss a little bit below the zone, because these areas are generally areas where, you know, they do stop loss hunts. They'll just spike price real quick, and then they'll shoot it right back up, which happens all the time. It's kind of what happened right here. They spike price down, and they spike it just below it. You can see that right there. They
Oh,
spike it
yeah.
just below.
Just, and most people don't even see that. They don't know that just that little bit right there probably took out, thousands or millions of dollars.
Exactly, yeah. That's exactly what they do. They spike price right there, and then this is where they trick people, because when this happens, I'm sure it's happened to you, where you're like, oh well, crap, they stopped me. I'm gonna hop right back in. So you hop right back in, and then because the thing is, the banks know when people are revenge trading, because they know when the orders are coming in. They have like their level 3 data, and they have all these orders that are coming in. They're like, okay, people are like rebuying. So when that happens, they just end up spiking price even further, like they did over here, and then they shoot it right back up. It's literally a psychology game. They know what you're thinking, so you kind of have to outthink them. Like, you have to be 2 steps ahead of them.
So could you have taken that trade? Could you have caught that trade or no? Or was that just too fast?
This one right here.
Yeah.
So let's see if we had a signal then. Yeah, no. So I probably would have entered. Actually, no, I wouldn't have entered this, because, like I mentioned earlier, the zone was right here. I like to have some sort of cushion, because I don't want to just enter a trade and then see. Yeah, because this is only about 300 pips. Like, I'd like to have a cushion where.
So you wouldn't have took that trade because it would have went
Yeah.
way the other way on us.
Yeah, exactly. So I would have skipped that trade, because generally I like to have at least 50% profit, because generally, I'd like to push for like 1500. So if there's like a 750 gap in between, so say if the zone was way up here. So say if we had this much space and the zone was like way up here, then I would have taken this trade. But because the zone is so close, this wouldn't even be enough to cover the spread, because the problem with this is, if you're using like Hugo's way or something, the spread's gonna be like 350 pips. So you think you're entering right here, but in reality, you're entering way up here. So as it pulls back right here, you get hit with the spread twice, because you get hit with the spread at your entry, so you're way up here. Plus you get hit with the spread down here. So like if price was to come down and you're way up here, and then say your stop loss was like 1500, right? So this is 1500 right here. You can see how much they literally push it to your stop loss, and including your spread. So they stop you out early, because then you need to cover spread right here as well. So it's literally on point. It's on point with your stop loss plus your spread. So you kind of have to have a little bit of a tight stop loss. That's why I trade with a 1-to-1 risk reward ratio. Like, a lot of people don't understand that. But the reason I trade like that is because I don't want to get caught in this. So like, people will have their stop losses right here for like a 1 to 3. I like to have it for, a 3 to 3, like way down here with my TP way up here. But as price moves in profit, I move my stop loss with it. And that's my whole theory behind using a 1-to-1.
Okay, I was going to ask you that, because I've been always taught to trade, as big of a risk to reward ratio as possible. I mean, I've heard people say 1 to 9, 1 to 10.
That's I always see people learn that way, but I've never seen anyone that's really profitable long term that trades that way. Like, you'll see people that are profitable for a couple weeks, couple months, and then they'll just go missing. There's a lot of trading companies that fell into that trap too. There's a lot of trading companies where they have a hot streak because they just get lucky with those little wins, and then all of a sudden they just vanish. You're like,
so your approach 1-to-1 is you're not going to get stopped out, because your stop loss is so far away from what the manipulators are actually stopping people out on. And then as you go into profit, you move it back to break even. Or
exactly, profit, yeah. And that's the real key. That's the real key behind risk management. Like, a lot of people don't see what I see. And I only see this because I've been doing this for so long. Like I've been caught in these little stop loss hunts like countless times. So, I'm like a trial and error person. I'm like, okay, how do I avoid this from happening? So generally, like instead of me putting my stop loss at, because usually I'll put my stop loss at the previous swing. So if I saw this entry right here, see, like in this situation here, the previous swing would technically be right here, but this is way too close. It's 760 pips. Half of that's going to be the spread for like 350 to 400 pips. So like instead of putting your stop loss here, I would have put my stop loss way down here. And and of course it'd be wide. A lot of people don't want to take that risk because a lot of people don't have thick skin. A lot of people are new traders and they're like, oh, that stop loss is so wide. Why would I put it back there? And the reason for that is so that I don't get caught in something like this, because if your stop loss was that wide, you would have survived this little, pullback or, manipulation downwards.
Yeah,
Because
yeah.
the thing is, a lot of people put their stop loss here because, like I mentioned, to put your stop loss at the previous swing, a lot of people trade the same way. And this is where people get caught up.
But as
with
long
these
as you're
little-
using decent risk management, I mean, you should be able to handle that larger stop loss in the event that it did go that far.
Exactly, yeah, and that's what a lot of people don't understand too. It's like, I always advise proper risk management. Lot size that's relative to your account size. A lot of people don't follow that. They want to make that money quick. So it's like if you're trading $100, like $100 account, you can't expect to take a 10 lot size or a even like a 5 lot size because it just doesn't match your account
What's
size.
the largest lot size you've ever taken?
Probably
10?
so. Yeah, I've taken 10, but it was on a AUD pair. So the AUD pairs are a little cheaper. So they're like half the cost of a normal pair. So I guess technically that would have been like a 6 or 7, but essentially it was a 10 for that specific pair. But if you compared it to like a US pair or something that's worth more like a GBP pair, then it would
Yep.
be worth equivalent to like a 5 lot. But yeah, I've taken a 10 lot. It was like an odd NZD pair, which is like equivalent to like 30% of a normal lot
What's the
size.
highest US 30 trade lot size you've taken?
I've taken a
5?
zero. No, I've taken the 0.10. So yeah, a 0.10, which I got really lucky because it was an accident. So I was supposed to put in a 0.01, but I accidentally put a 1 before the 0. And thankfully it was for a scalp. So literally I took that trade and then I got out with a couple $100. So I got out with a few pip win, but I was sweating the entire time because I was like, crap, this could literally blow my entire account because,
Yeah.
in order to trade that lot size, you need to have like at least like 10,000 in your account.
Yeah.
Just to survive the margin. Because the thing is, you got to factor in the spread, plus you have to factor in any sort of drawdown that happens, which is bound to happen at some point. But thankfully, went straight into profit, and as soon as I went into profit, I just closed it out.
Yeah.
So
I mean, some brokers probably won't even let you trade a lot size that's not relevant with your account. I mean, people think they can trade $1,000 account with 5 lot size. Probably wouldn't even take it.
Exactly. Yeah. It just depends on your leverage. So if your leverage is super high, then which is relevant with like unregulated brokers, because they don't care about your money. Obviously they're betting against you. So that's why they give you max leverage, like 1 to 500, because they already know you're going to lose. So the thing is, when you take a trade, they're trading in the opposite direction. So, that's why they don't really care for them. But if you're trading on a regulated broker, they I think they have a cap at like 1 to 100, or even in the US, I think it's like 1 to 50.
Okay.
Yeah.
All right.
But yeah,
Well,
that's probably the biggest lot size overall.
that's pretty good though. Yeah, you can really, I mean, that's some serious money if it goes in the right direction.
Exactly. Or it could be a serious loss and it goes in the opposite direction.
It'd be a serious ass kicking, that's for sure.
Oh, I agree.
Yeah, that's crazy. So I guess what I'll do is I'll continue to work on scalping. Yeah, I'll stay away from 30-minute US 30 charts, since you're right, it does go into different um, sessions, which I don't like to do at all.
Yeah,
Um,
exactly. You never know what's going to happen next.
I mean, would you suggest I just stick with US 30? I mean, that's always been my pair, but I did want to, at some point, not this session, but maybe if we can hook up again at some point, but to look at how you trade your 4-hour regular Forex pairs.
Oh yeah,
Um,
definitely, for sure.
because I think you have a lot of success there. I mean,
Yeah, the Forex is that's generally that's where I specialize in. That's where I'm really good at. I
mhm.
actually just started trading US 30 like in February, and then I realized how lucrative it was. And that's why I developed a daily strategy because, I loved US 30 so much from February, where literally I spent every single day just back testing. I was trying to figure out like what patterns could I identify, could I identify the momentum swing between each session. And then that's how I came up with the daily strategy
I
because
love US 30. I mean,
yeah,
I mean, most of the traders that I've talked to that were Forex traders, once they start trading US 30, they don't even trade Forex anymore. I mean, they just trade indices, whether it's US 30 or NAS, or I mean, then they incorporate gold at some point. I like trading gold, but that's another one you got to really watch your ass on, because that can take you that can really aggravate you. That goes,
yeah, definitely.
I mean, that can go any
Yeah,
which way.
yeah, I don't like gold at all. I traded gold when I first started trading, and I made some money off it, and then I blew my account. I was like, I'm never trading this again because it's that pair is so erratic. Like
Oh yeah.
it's hard to really determine the direction of it. I think gold is definitely a scalping pair too. It's very similar to US 30, but it's a little more erratic. There's not really it's not as smooth as US 30, I would say.
No, no, no. I mean, New York session trading US 30. I mean, it can get you going. I mean, it's explosive. I mean,
Exactly.
it's moving. If you like movement, I mean, it's the one to be on.
Exactly.
But
And then if you master the daily strategy, like literally you can just take that every single day. That's where I usually bank most of my trades on. It's mostly just that. And then the Forex is kind of just extra now. Before Forex used to be, my main thing. It still is my main thing, but not money wise. So it's my main thing where I'm most knowledgeable and I know how to trade it. But profit wise, I can make more trading US 30 1 or 2 days versus trading Forex the entire week. So that's kind of
yeah,
where my attention has gone now.
I mean, Forex can be kind of boring once you start trading US 30. I mean,
Oh,
it's
definitely. Yeah,
like watching grass grow sometimes with the way they move, you know?
exactly. And Forex is good. It's good for like consistent growth. Because the thing with Forex is, since I trade on the 4 hour, I only look at the chart like about 6 times a day. And when I do take a trade, I literally just put the trade in and then I let it run at that point. I don't really, I'll adjust stop loss sometimes, but I'm not straight on it where when I get an alert, I'm like, all right, I got to move my stop loss. Literally, I'll give it some
Do you
time to.
monitor all your trades, or do you run an expert advisor on your, let that manage your trades, like trail stops or um, your
I, I,
stop
I
loss,
monitor I
profits?
monitor them all myself. I used to use this bot before when I was trading on TD Ameritrade, but then I kind of like to be more engaged, and also I like to give other people updates in the course. I mean, in the chat because I know a lot of people aren't monitoring like I am. So
Yeah.
since I'm available, I think it's just beneficial for all of us because with me monitoring like throughout the day, I know what's going on with the pair. Like we're not gonna like look at the pair and be like, oh crap, what happened there? Like
Yep.
I'm literally monitoring it like the whole day, so that if anything wrong happens, I can give an update. So it just works out both ways. So for the most part, I generally just monitor it myself.
How do you know which? That was another question I had. How do you know? Do you put an alert on every pair? Like the alerts that you in your course. How
Um,
do you know which pairs are to look at?
I used to do that when I traded on the 30-minute chart. So on the 30-minute, I would have an alert for every single pair.
Mhm.
But now, since I only trade on the 4 hour, there's only specific times when I look at the chart. So I look at the chart at like 6 a.m., 10 a.m., sometimes at 3 p.m. after the spread, and then again at 6 p.m. and 10 p.m. So since I'm on a specific schedule, like I don't need alerts for those anymore. What I do is I just look at the chart whenever, time hits. And then when I'm in trade, that's when I set the alerts. So I pretty much just set the alerts at my TPs. Like I'll set it at stop loss, TP1, TP2, etc. So that once I hit those specific price points, I'll know to look at the actual pair. But I'm not setting, like 4-hour candles all the time,
Okay.
since the strategy that I'm applying, I'm using the K2SR zone strategy. For that, we don't really use the signal as a catalyst. Generally, for every other strategy, once you get a signal, that'll be your catalyst to enter the trade. But if you're trading the zone strategy, like we are right here, basically what I'm looking for is I'm just waiting for the price to, break outside the zone. So when that happens, then I can take the trade. But if you're using the pivot strategy, then yeah, obviously you can set your alerts because you're going to enter off the, candle close. But me personally, since I'm trading the other strategy, I
Mhm.
just look at the chart for 4 hours pretty much.
Okay. Okay. All right.
Yeah. Yeah.
Yeah, this is great. Thanks a lot. Appreciate this. This really helps.
Yeah, no, definitely. No, I want to make sure that you understand everything because I know there's a lot of traders that they don't understand, but they're too scared to reach out. Like I'm
No,
always available.
no,
I,
no.
I I would consider myself more of an educator than, a standalone trader because I've been trading for so long on my own where it's it gets boring. It's like literally I'm staring at the chart by myself all day. I'd rather help someone and teach them to, get better because, it goes a long way, obviously.
I mean, I think if you can master this or you can become, successful and consistent, I mean, you can make a very, very lucrative living just doing this. Am I wrong or is that true?
Oh, from teaching?
No, from trading. I mean, if
Oh
you
yeah,
can,
no, definitely. Yeah, 100%. Like these trades, like literally, it's like a nonstop savings account pretty much for me because literally when I trade, I set the trade and I let them run. So at the end of the day, end of the month, end of the week, um, I check my profits and I'm most of the time I'm almost always in profit. So it's
Mm.
literally just it's just accumulating day after day pretty much.
How long are your 4 hour uh, trades take from the time you enter a trade till the time you'll close the trade? What do you just keep on taking profit or raising your TPs as it keeps on going up?
I usually just leave it. So if it reaches the full TP, then I just get out. I usually don't trail it because I have so many positions running at once. It's kind of hard to follow. Um, so generally, it was like I mentioned before. Like once we have that edge, like we have the entry right here. Once we hit the TP, that's when the edge is gone. So I just take my profit and then I go look for my next edge for the next
Okay.
pair or
Okay.
thing that I'm trading. But yeah, I
Some
mean,
people do trail them, right? They just keep on trailing it. It pulls back and continues back up if it's in a nice up or downtrend.
yeah. Technically, a lot of people actually do that. But in my case, it's kind of like I have so many things going on. Like I have the chat going on, I have other mentoring sessions, so I can't like monitor it like an eagle eye. Like I can't be
Yeah.
staring at the chart all the time. Um, Before I used to do that. That's what I used to do. I used to just let them run. Like if I was in a trade, I would just trail the stop loss and have no TP. I would literally just trail it as it moves along. But now it's kind of hard for me to do that because I've tried to do that in the beginning, but I get messages all throughout the day. So like sometimes I'll be answering questions and I forget about my trade and I'm like, crap, I should have just closed it at full TP because sometimes like this will happen. Like it'll come down to full TP and then as soon as it hits full TP, it just reverses. And
Yep.
then I'm like, crap, I should have just left my TP on there.
Yep.
Yeah, I mean it's a double-edged sword. It depends on what you're really aiming for. But Forex has been pretty profitable for me. I mean, it's been like in the beginning when I started K2, I was just trading and I got to a point where I was so profitable where I just, quit my job and then I was just trading. And on top of that, I just started educating because so many people wanted to learn. And, it's hard because for me, I'm able to trade this like without any indicators. Like I can see what's going on the chart without all this stuff on the chart. Like I could just look at it and I can see what I'm looking for. But once I developed the indicators, that was where I could teach people what I'm looking at.
Yeah, I mean, it's fantastic.
Yeah, because you know, looking at this here, like if you look at the chart well enough, like literally I was on the chart every single day, probably for the last 5-7 years. I've been trading for about 10 years, but I was on and off the first 3 to 5 years because I was in law school. And then once I started working my job, that was when I was like, I hate my job, whatever. So that's when I like really zoned into trading. And then, you know, if you look at the chart here and you just hide the indicators, you could kind of see a pattern there. If you look at it well enough, this is what the indicators basically do. So the indicators are basically training you to see what I see on the chart. So once you look at the chart well enough and you see these, you know, these same patterns that just keep replaying each other, you know, time after time, once you take off the indicators, you eventually you'll be able to spot this. Like you'll know that this is an uptrend, or you'll know that this is a downtrend without even like having the indicators. But if you turn on the pivots, you can kind of see a pattern there. This just it's like training wheels basically. It's basically training wheels teaching you how to look at the chart. But if you're able to look at, you know, X amount of time, you know, your eyes just start to spot things. It's like learning a new language basically.
It's fantastic. I mean,
Yeah.
it's helping me see things, that's for sure.
Yeah, definitely. I mean, it makes it so much easier when you have, you know, the training wheels on there.
Exactly. I don't mind training wheels. If it makes me money.
Yeah,
I could care less how many training wheels are on there.
exactly. And a lot of people dislike indicators, but the thing that people fail to realize is that you are the indicator. You know, like me, I'm the indicator because I can see this without, you know, these indicators that I created. Like these are all from my mind. It's like something that I see. So like when I add these on here, I'm able to illustrate what I can see on the chart versus, you know, me just looking at the chart and then being able to see, you know, what I see on the chart without it. Because if I wanted to mark the chart up, I could literally just mark this up and I could be like, okay, this is a downtrend. You know, and then I can like identify that there's like momentum coming down, momentum coming up, you know, et cetera, et cetera. But in reality, you know, these indicators are created from my mind. So like a lot of people have hate against indicators, but you know, once you start to look at charts well enough and you can start spotting patterns in the chart, you could technically make your own indicator to pretty much visualize what you see in your head. A lot of people don't.
Which is real time, really.
Exactly. Yeah, exactly. 100%. And the thing with the indicators is that it's so accurate because, you know, I put the data in there to look for exactly what I'm looking for. So, you know, having this here, there's like literally no guesswork. There's like no mistakes because it's all computer generated.
You created them all? Is this just you?
Yeah, this is all me. So all the K2 indicators, I created these on my own.
What does K2 stand for?
It stands for my two dogs, Kobe and Kai.
I always wondered, what the hell does K2 stand for? It must be something mathematical.
No, yeah, it was a joke at first, and then I just ran with it, and then it just got to a point where it became a company, and I was like, oh, I guess I can't change the name anymore.
No. Well, it's great that you're getting success with it. I mean, it seems to be a lot of people in the chats, and the word's getting out. I'm sure that, you know, people are joining up with something that's really good. So.
Yeah, definitely. And that's the thing that was hard, like getting K2 started, is because I had something to share with people and I really wanted to help people. But, you know, the trading world is it's so skewed where there's so many scammers and untrustworthy people that it's hard for people to really trust something. Like when they see something like this, they're like, this is too good to be true. And when reality is legit, you know?
Yeah. Oh, no, it's awful out there. I mean, you're right. There's so many scammers. It's crazy. I mean, you think this is bad, get into the crypto space. I mean, I dabble with crypto a little bit too, and oh man, they're everywhere.
Yeah, exactly. With the fake coins and all that stuff.
It's awful. Yeah. Yeah, it's crazy.
Yeah, that's probably a space that I'm probably not going to enter anytime soon. Probably not until it's, you know, It's very established. I think right now it's just too it's literally all speculation. The thing I like about the K2 or about Forex in general is that so like
It's
with
real,
yeah, with
right?
our zone, there's so much history where you can go back and you can see exactly where it's tested in the past. You know, like this same zone that we're at right now, this was tested way back in November 2019.
Oh,
And you can literally go far back and you can see the same exact area where we're trading right now. This is where it was July 2018. So the summer of 2018, we were in the same exact price point.
hmm. So it knows
Yeah,
that. I mean, it's almost like like memory, right?
exactly. Yeah, and that's why I like these zones. So I created these zones because um, it pretty much puts together the historical data. Like you can literally go back as far as you want, and then you can see how far it extends to going back. Like if we were to go like on the weekly chart, you can see that this area has actually been tested a lot past
What's your favorite
2017.
pairs? You must have some favorite pairs you want to share.
Um, so it's kind of a toss up. Sometimes I like certain pairs, sometimes I like other pairs. But the whole watch list that I have, provided on the website, these are my very favorite pairs. But USD used to be one of my favorite pairs. Basically, all the major pairs. Those are like my very favorite. Um, until I realized that these are actually the most manipulated pairs because they're the
Are they?
mostly wide. Yeah, they're the most widely traded pairs. So obviously, when there's more people trading those pairs, it provides banks and institutions more opportunities to make money as well.
True. True.
So I started to veer off from the major pairs and I started trading the minor pairs. So I started trading pairs like Euro NZD, GBP odd.
Yeah.
Also because they move very fast. I love how they move. Like GA will move like 100, 200 pips compared to like Euro USD, where it's moving, a fraction of that. It's moving like 50 pips.
Yeah, I can't deal
So
with the slow moving pairs. I mean, it's just boring.
exactly, they're way too boring. So they kind of come to a point where I'd rather just set and forget it. Like I'll take the trade and I'll just let it be instead
Yep.
of me monitoring because you're literally like watching paint dry because you're not going
Yeah,
to see any movement until maybe like 8 to 10 hours later.
exactly.
Yeah, and it's like literally impossible to scalp forex because your spread is usually so wide where you literally can't make any money unless you're trading something with a super tight spread.
Yeah, I'd agree.
Yeah,
That's why I like US 30. I mean, it's something. I mean, you can
yeah,
make some money.
you can make a ton of money off it. Yeah, I agree, 100%.
All right, my friend, I'm gonna let you go. You gave me an hour, almost an hour and a half. I really appreciate that.
Yeah, no problem. This was good. It was good going over all this because this actually made my brain think a lot more about your US 30 as well. So I'm probably gonna go back and see what else I can like whip up because that whole thought process that you were thinking prior to market open, that's actually a really good idea. So if we can probably lock in 2 positions a day, you know, sky's the limit at that point.
Oh, the early session, yeah, the five, yeah, yeah, that'd be great. We get two of those.
Exactly. Yeah, because the London session is perfectly fine as well. So if you could tie all three together and have 3 positions from London up into New York session, that'd be great.
Yep.
And then
Oh,
you can literally make a ton of profit that way as well.
yeah, that'd be fantastic. I mean, then you don't have to worry about, even thinking about taking trades past like 10:30, 11 o'clock, New York time in the morning.
I agree.
I've gotten hammered there. Yeah, like I said, I've taken trades, after lunchtime, thinking it was gonna go one way and only to get,
That's the
only to get,
opposite.
oh, yeah,
Yeah, that's definitely one thing to keep in mind. Like I would never recommend entering a trade after lunch because that's usually where the market just goes crazy. And a lot of people try to sell off before the market closes.
back then I was trading with Osprey FX. So, I mean, you had no choice if you're trading US 30 with Osprey. I mean, you had a small account, you had to trade it with one full lot size. So, I mean, your risk is unmanageable with your risk. So, I mean, now I'm trading with Ingot, so I can select smaller lot sizes to control my risk. So it's a little bit better, but I still tend to be risky.
Yeah, I mean, it's always going to be hard. It's all about trade psychology. You're always going to have that greed in the back of your head
Yep.
until, you know, until it actually gets you.
It's got me more than once. I've blown
I
enough
agree.
accounts already.
Same here starting out. You know, it's the price of education for the
You know,
most
I
part.
yeah, and I've thought about dumping a ton of money into my account and you know, then having then being able to trade higher lot sizes, but I really want to get enough experience before doing that.
Oh no, I agree. Yeah, you should definitely try to grow a smaller account because it'll pay off that way because you'll actually, you know, feel accomplished when you grow that account. And then once you're really consistent, then you can start adding more money in. That's pretty much how I started. Like I was blowing accounts left to right when I first started, and then once I became more and more consistent, that's when I started to, you know, toss in a couple of $1,000 here and there, and then from there, you just, you know, it pretty much skyrocketed my profits at that point.
What's in your opinion, what would be a nice level account where I mean, you can really make some profits, 10,000, 5,000, 20,000.
For US 30, I would probably recommend 5 to 10,000
Yeah.
because the thing with US 30 is you can make so much money daily where that'll compound because you know, if you keep increasing your lot size and you're just using proper risk management, you know, cooped with our high win percentage, like literally it's a no-brainer that you
Yeah.
can grow that super quickly. So that's probably, I think that'd be a good point. I would, if you were to go that high, I would keep your risk at about 1%. So
Okay.
even though you're at I know like once you're at 10,000, you think that, you know, it's cool to be trading, you know, 0.10, but in reality, you should probably just keep it to a bare minimum. Because even though you have a lot of money, you also don't want to risk that much because you're risking a 0.10 lot size, you're risking like thousands per trade versus, you know, risking a couple hundred.
Yeah. No, I hear you. Yeah.
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 And,
Just
and, and that's quite
grow smaller.
exactly. And that's why it's good to grow it because you know you're gradually increasing your lot size versus you going right in and you're already risking a couple of thousand on your first trade, and it's like it could go one way or the other literally, and it could, you know, it could impact you heavily if it, you know, your first trade doesn't play out like you thought it would.
You know what's fun to do? Take a demo account worth like 100 grand and really get reckless with it and see if you can how much money you can make. Believe me, you can make some serious money if you had no no skin in
No
the
risk.
game.
Yeah, exactly. You had no risk. You're like, all right, I'm just gonna set and forget it. And that's pretty much where I've gone to in my, you know, in my experience. I've been trading for so long where it's like I understand how losses are, and it just doesn't really affect me anymore because I'm like, okay, if I take a loss here, that's fine because I'm gonna make it back tomorrow, you know, the next day or so on.
Yeah.
Because
Yeah.
I've done so much back testing where I already understand the game. You know, it's like you take a loss here and there, but you know, there's no point in getting hung up on that loss because, you know, eventually you're gonna make it back.
Yeah. I'm surprised you don't get into trading people's accounts, you know?
Uh, I
Gotta be
tried doing
profitable
that
in
at
that.
first. Yeah, I mean, well, that whole thing, it'd be good if people had bigger accounts. So initially, I used to trade an investor account
Mhm.
between a few people, and then once I got good, I was like, okay, I'm just gonna trade my own money. So then I've been trading my own account, and then, you know, trading a big account and then versus trading a bunch of small accounts, it just doesn't really make sense
True.
because you can make a lot more money just trading your own account and not having to split profits. And then also, I think it's a psychology thing because when I trade other people's money, it's you just feel a lot more pressure and
Yeah.
you're not able to just let your trades go. Um, so that's I mean, I've seen a lot of people that do it, but I think me specifically it just doesn't fit my, you know, my trading style.
Yeah.
So I'd rather just, yeah, because if I lose like 10,000 of my own money, that's fine. But if I lose 10,000 of some other people's money, it just it just it takes a toll on you, you know?
Oh yeah. Yeah. No, I feel the same way. I don't think I could do that either. I don't mind losing my own money, but losing somebody else's money, I couldn't do it.
Exactly. And especially if it's someone that you actually know, like someone that's, family or friend, stuff like that, it
That's
can
even
lead
worse.
it lead to a lot of bad blood. And it's just like,
Yep,
it's not something that I really want to get into. And
yep.
also, if you're going to do that, you need some special licensing as well. That's what one thing that I looked into as well. You need to have, you need to have some sort of financial
Broker.
license.
Yeah.
Yeah, you need that's like a series 5, series 3, and series 71 or something like that.
Hmm.
In order to trade like that. And it's just too much work, like you literally go through all that just to trade other people's money. And then if it doesn't end up going well, you're kind of like, okay, I should just trade my own account.
Hey, what's interesting too, if you haven't done this yet, you might want to take a look at it, and I'm sure you might have probably already did it already, is what I've done is I've watched the movement on US 30 during like the New York session, and then
Yeah.
tried to overlay that with like the big banks that are actually trading, like JP Morgan, to see what
Mhm.
they're doing at the same time that the US 30 market is moving. So for example, I've seen where the US 30 market is diving, and yet you look at the like JP Morgan or Woolworth or those big stocks, they're dumping price at the same time. Pretty interesting.
Oh yeah, no, I've definitely done that before. I used to. That's why I would watch CNBC in the morning. I would just have that running. If there's anything crazy going on, that would that'd signal me not to enter a trade, even though we had that daily entry. But it
Mm,
got to a point where it got in the way. So it got to a point where I was becoming too careful when I was watching the news, and I would miss out on a lot of trades.
yeah.
So I
Yep.
was, screw it. I was like, screw it. I've already done the back test on this. I know that this works long term. So, if we do take losses, even though we're trading during news, then, that's fine. As long as we're not
Always good,
trading,
right?
yeah, as long as we're not trading during something really serious, like the Fed, whenever the Fed's speaking, that's like off the table because they could literally push market like crazy if they want to, stimulate the market or if they're going to like report bad news. It could literally go one way or the other.
Yeah, it's going to be interesting, Shawn, I think, as we move forward here through up towards election and, I'm not even sure what after election is going to look like, but I mean, it could
Oh,
get
yeah.
really interesting.
It could get ugly. I mean, if Trump loses and Biden wins, I don't know what's going to happen to US 30. It's probably going to come crashing down heavily.
Yeah,
Uh,
yeah.
but I mean, we'll have to see because even if that does happen, the market makers and institutions aren't going to make it that easy. They're not going to just let us, short the market and make a ton of money. They're going to short the market, spike price up, and then drop back down, and it's
Yeah,
going to be all over the place,
yeah.
literally.
Almost like it was back in March, February, March.
Yeah, that was a scary time. Honestly, I thought the market was going to come crashing down. So I literally I sold off my 401k and I just like cashed out the money and I put that into my trading account.
Yeah, I mean, because if yeah, it's I mean, I think if they didn't stimulate the market with the couple $1 trillion and stabilize it, I think it was going to get really bad. But
Yeah.
I mean, with that said, I think I mean, you just can't print money. I think we had this conversation last time. You just can't print money and expect and keep throwing money, paper money at something and expect not to pay a price for that. So I think we're yet to pay that price.
Oh, exactly. And the US dollar has been weak literally all year. So I think it's going to just keep getting weaker. So pretty much for all, US dollar pairs, I'm pretty much trading against it, whenever I get the chance.
Yep. No, I'm with you. All right, my
All right.
friend. Thanks again, I appreciate it. It's nice chatting with you.
Yeah, no problem. Definitely. Yeah. If you ever want to get on another call, feel free to let me know.
Okay.
Otherwise I'll be available in the chat.
Yep. Great. I'll see you in the chat then.
All right. Good.
I'll see you on one
Talking
of
to you,
your
bro.
training sessions as well. Those are great, by the way.
Oh, definitely. Thanks. Yeah, I'll be on that tomorrow.
Okay, Shawn. Thank you.
All right, Brian. It's good talking to you.
You too.